Welcome to Fintech. What the heck? I'm your host, Andrew Carpenter. This is the podcast all about Fintech and the future of data. This is our last episode of the season. Today I'll be interviewing Valentin Moullet, co-founder and CTO of Alquant, about enhancing traditional asset management. As I'm recording this, Intrinio hasn't launched this big change that you are now able to see on our website when this podcast is released. Internally, we called it Operation Simplify. I'm the Chief Operating Officer at Intrinio, so we give all of our undertakings operation names, and we called it Operation Simplify because we were trying to dramatically simplify the process of understanding what Intrinio offers, how it's priced, and buying it. We did a big change a year or two ago when we got rid of our marketplace, and we've talked on the podcast about marketplaces and how there's a lot of them now, and they actually are making things challenging if you want to buy data. Intrinio has been a purely consultative sales approach. We have built custom bundles for all of our clients for the last year or two based on their needs. We include the different data sets that we have access to, partner data, and that sort of thing. But it's still a challenging, confusing process to license data. You know, there's a lot that goes into, can I display this? Is this internal use? What am I getting access to? How much does it cost? And because of the nature of data, most companies obfuscate that. They won't tell you what the price is. And so we decided to do something very different. If you go to Intrinio.com, you can see that we now have just two tracks, two solutions, and each solution has three tiers. There is an equities track with a bronze, silver, and gold plan, and there is a options track with a bronze, silver, and gold plan. You can self-sign up for any of those plans. You can chat with our team, and we'll talk to you about the plan on the website, or you can schedule a sales call if you want to. But we wanted to get a lot of the questions that folks who are looking for data have out of the way right on the website. How much does this cost? Well, we're just going to tell you. That is scary for businesses to do, especially in the data industry, because your competitors can find out what you're charging. People are always price sensitive, but we thought that transparency would be appreciated. And we also thought that based on the demand that we get from our customers, it's almost always in one of those two categories. They either want fundamentals and stock prices, along with ETF prices, or they want options. And it's either one of the two. A lot of clients end up buying both, and we can definitely sell a gold, silver, or bronze plan on either track to anyone who's interested. But we thought that by providing plans for equities customers, plans for options customers, would simplify things. And by displaying those prices, you know what it costs, you know what it costs to upgrade and to downgrade through those plans. And a lot of the times, companies try to do huge price increases after the first year, or they try to jack up the price based on the size of your company. A nicer way to frame that is to try to give discounts to smaller companies based on their ability to pay. But Intrinio's kind of found that we need to charge something because we have support, we have data quality teams, infrastructure teams, licensing costs of our own to obtain data. And the overhead of any business. So we can't make it super affordable, and super affordable data tends to be low quality. But we also figured that we're selling only business solutions, business to business, and so we think we've got prices that will work for most businesses, and we would rather keep it simple, make it easy to understand, than here and there be able to charge differential pricing. So if you go to our website, you'll see that the bronze plans have end-of-day data. It's also known as historical data. It's delayed by at least 24 hours. And for both options and equities, that has the closing prices from yesterday that'll be accessible today. And that's really good data for charting historically, for testing out our API, for building graphs, and doing back testing, all kinds of popular uses for that. And that's typically included in our bronze plans, which are very affordable, easy place to get started with Intrinio. Then on our silver plans, we have 15-minute delayed data. That includes 15-minute delayed streaming options prices on the options track, and 15-minute delayed equities prices on the equities track. We've done a lot of work and research to find streaming solutions that are affordable and still high quality. And we've talked about this extensively on the podcast, that oftentimes real-time solutions are very expensive or very low quality, and we wanted to be able to offer something that had the high quality you'd find on a more expensive exchange with lots of volume and low latency and low drift from the NBBO, but also had a price tag that was affordable for businesses, because all of our clients are trying to make a profit, and many of them are just trying to stay in business. So we know that data budgets are always constrained. So we worked really hard to provide that middle of the road solution that had the best benefits of all worlds on the 15-minute delayed silver plans for both tracks, and then we have real time for the gold plans on both equities and options. And one of the big benefits of working with Intrinio is that on those plans that have market data or options data, we work with you and your team to make sure that you're licensed properly with the exchanges, and that the challenges that come with obtaining that data are all met properly, so that your company is abiding by SEC regulations and the exchange regulations. But I think you'll find, if you dig into the data, that we actually have a lot of benefits in those areas that make the total cost of ownership for our data much simpler. Then there is a platinum tier if you want it, which is the way we've always done it, which would be to put together a custom solution. And for our silver, gold, and platinum customers, there are other data sets that we can add for you, and we'd love to talk about adding ETF data, estimates data, mutual funds, and news if your platform needs it. But we thought that this solution would be easier for us to sell, easier for customers to buy, more transparent, and would fit the needs that most of our customers were coming to us for, which was either that options or equities track. And we hope you love them. My first guest today is Valentin Moullet, co-founder and CTO of Alquant. Alquant is a Swiss fintech focusing on enhancing traditional asset management through quantitative methods and artificial intelligence. Thanks for joining us today, Valentin.
Yeah, thanks, Andrew, for having me.
Yeah, so can you tell us a little bit about your background and how you ended up starting Alquant?
Sure. So my background is actually not at all in finance or investing. I have a master's degree in computer science and data analysis, and I worked in big tech companies before, like Google, Facebook, and Microsoft. So I was really not in finance at all. But the reason why I ended up there at Alquant and co-founding the company was that I met an old friend of mine, one day, which was Guillaume, our current CEO. And Guillaume actually explained to me a current project that he was working on with a friend of his, Quang, which is our CIO currently. And he was telling me, yeah, listen, so we worked in big financial companies before, but we saw how, all the different investment strategies were run, and we really feel like it's not optimized at all. They don't use a lot of technologies. There is definitely a market there, so we want to try to open our own quantitative asset management firm. And at that point, their main issue was that they were both studying quantitative finance, and they didn't really have a strong background in tech itself, so building scalable systems like infrastructure, getting automated data automatically, so all of the kind of things. So they were looking for a third co-founder to actually start a company. And that's when Guillaume pitched me the idea, and I said, listen, I've worked in big companies before. I think it would be interesting to dive in this kind of industry, which at the time, at least, I was really thinking that they were lagging behind in terms of technology as well. So it was a good match. And that's why we decided to actually found Alquant.
That sounds familiar. That's my story too. I wasn't into finance, but I found some folks that worked in the industry and had seen problems in their own experience that they wanted to set out to solve. Can you talk a little bit more about those problems that Alquant is solving? Like specifically, what are the challenges that your co-founders saw in the industry that you set out to fix?
Sure. So I would say there was three main pain points that they've seen. The first one was a bit about the update of the data. All those companies, they have a lot of Excel sheets, as you probably know, right? They don't like APIs. It's not their stuff, at least previously. Now they're maybe starting a bit to change. So the way they update their data is really manual. A lot of manual work, a lot of people working on it, typing stuff on Excel sheets, checking the prices on Bloomberg or whatever the old way of doing it was. So it was really inefficient, right? So that was the first pain point, was automation was not really there. The second one was based on the investment decisions that those companies were taking. A lot of those were basically having a big meeting with all the important people, let's say, and every quarter, and decide on what to do with their assets. Like what should we invest in? Should we change our position? Should we rebalance this way or that way? And it was more based on articles they've read before, on a bit sentiments of themselves, and really not in a quantitative way, which is quite tough, I would say, because how are you sure that your decisions would lead to a strategy that makes sense? How can you ensure some kind of risk, like less risk? Of course, you have they have some process that allows them to not breach some stuff, but all the decisions was basically were based on more sentiments than actually quantitative or quantitative numbers or whatever it would be. So it was the other pain point. And then the last pain point was more about reporting of the different funds or products that those companies were distributing or were creating. A lot of people are used to receive maybe once a month, or to at least being able to download once a month a PDF which would say, oh, here is your performance in the past months for this product. And that's pretty much it. This is, at least to us, didn't feel like something from 2021 or 2020 or 2018 when we launched the company. It was more like something from maybe 1999 or I don't know, before .com. So this we wanted to change as well. Like the reporting file, we wanted to have more transparency and also more, data updated daily. You can access your different investments in different products on a daily basis, on mobile, on desktop, wherever. So this was a bit. Those were the 3 points that we wanted to change.
Yeah, if you're only making investment decisions
yeah.
every few months or something, you're so far behind. And like it's basic finance 101 is not to be emotional, to make data-driven decisions. Mm-hmm. But also then the humans that are using this investment intelligence, they don't want to wait either. They don't want to wait for their monthly PDF to know what's going on. It isn't modern, and it's not a scientific approach to investing. It makes a lot of sense to me. Mm-hmm. So you before you came to Alquant, you've been working in technology at some very big companies, and probably that had a more modern approach than some of the financial world. Can you talk a little bit more about the technology that you brought from your own background, like this artificial intelligence and the data? Data piece. How did you bring that to Alquant to make that change and make the industry a tool for the industry that would be a little bit more modern?
As you said, I would say the industry I was working on before, the type of companies were quite different. Mainly there are two parts where are quite linked, but that I took from those companies to also include in Alquant and in our vision. It was everything about automation and scalability. I think in those tech companies, they really think about scalability, first of all. Like, can we scale this? Like, if we build that, does it mean a lot of technical depth? Like, do we need to rebuild everything after because we didn't think about this way or this way? How can we profit more by building a certain kind of product if we have more customers or clients? So scalability is really something we always keep in mind when we build new features on our platform, or we want to maybe open a new branch of our company or something like this. We always want to make it available as much as possible to as many people as possible. And the second part is more about automation. So as we spoke before, it's more straightforward, but there is not a lot of automation in the industry yet. I mean, a lot of manual work. So everything that you had to do twice in those tech companies, you would automate pretty much, right? People hate to do twice the same stuff.
Right.
Sometimes for the better, sometimes for the worse, I have to say. Not always for the better. But this automation was pretty much inexistent in the companies we've seen in the financial industry. So we want to really push that into our company.
Yeah.
That's a bit the two main points. I would say that everything around AI I would link it to automation. AI is used for us not in the investment process, so we will never actually invest in a position because some model told us to do, some AI model told us to do. We might do that in the future. Now we didn't have really the bandwidth to do that. We need to explore more a bit, explainable AI. How do you understand the actual the features that you feed into the model? How do they play a role in the actual decisions at the end? So this we didn't explore too much. But what we did is that in the research process, when our quants are researching on a new strategy, a new indicator or something like this, they would use artificial intelligence to basically drill down to important features or features that seem interesting, uncorrelated, or that will bring the most information to the solution they're trying to solve. So this is one way that we are using AI. So more to help our quants to basically drill down to only maybe a few features, like tens of features, instead of having hundreds of them. And another way of using AI in our company, which is more like what we're doing right now, it's more really research now, but it's we want to overcome the issue of overfitting backtests. I don't know how familiar you're with that, but
very familiar. Tell me about it.
Okay. So basically, the issue is that if you try to find a very good model, right? Even if you do it without AI, just changing some parameters, saying, oh, when the price is below this, or whatever you want to do in your algorithm, the more you do it and the more you test your strategy to see if it's good, the more chance you have to overfit and think you have a good strategy, but actually you made it good because in the past exactly this stuff happened. For example, if you have a strategy that says never invest on Mondays, but actually because in the past there were like maybe 7 Mondays which were really, really bad, right, in the past. But you cannot assume that this is something that will hold on in the future, right? This is probably noise, probably. So our way to tackle this issue right now is to use generative adversarial networks. So we want to create synthetic financial data in the same way that you've seen those pictures of fake people, right, online. We want to create fake time series or financial time series that would follow certain kind of characteristics. Typically, if we want to replicate, create a GAN that would be able to produce equity-like time series, we would feed with some equity time series. If we want something to create VIX-like time series, or the volatility index, we would feed maybe with the volatility index and see how the model is able to create synthetic data based on this. So we're having kind of the same features, the same kind of movements, but in different times, in different ways, so that we could actually generate kind of different paths that didn't exist, but that our quants can use when building their models, and then at the end use the real path to do the final test if you want to see how it would have performed.
I see. So
that's a bit like something very cool.
Yeah, you're training the model with synthetic paths and testing the model with the actual past to avoid being overconfident, basically, to say, did we build a model that we're going to use to predict the future that actually predicts the past? So
yes. So when we build those models, we actually don't use AI to build the models that will take the decisions. Again, we would our team will actually use statistics, like mainly statistics, some algorithm, but no AI when we kind of train, if you want. The training part is more like here manual, because we want to avoid the risk of the model being able to realize the underlying GAN behind it, so that then we would have some kind of issue because we have two AI that would understand each other, and then it would understand that the AI was built this way. So I mean, this is we didn't really look into it too much, but we were scared that some things could happen if you actually use AI on synthetic data like
Interesting.
this. So we avoided it.
Yeah.
Maybe it would work, right? But we decided not to go this route, also because we want to have more explainability when we build our models, and when we talk to potential investors, we want to be able to exactly explain, okay, this is the reason it took this decision or took this decision.
Yeah, you're avoiding the hubris of saying just because we can do this, we should, and then we should set the thing free. Because there's examples all over in our industry of folks who thought they could predict something, and then there was an event they couldn't foresee, and their models didn't perform well. So you're using them almost as like to assist your quantitative analysts, so that the artificial intelligence and machine learning can drill down to the truth and use very sophisticated modeling to prevent overfitting. But at the end of the day, we're going to apply some logic and some human kind of assessment to make sure that this is defensible, and these positions that we're taking have a little bit of oversight that you can explain to your customers.
Yeah, it's basically addressing there was a pain point in the team. It's like, okay, we know that the more you backtest, the more chance you have to overfit. But then it's quite annoying to research the investment strategies while not being able to actually test it. Right. So we want to have like some kind of playground for them to actually test it, and then actually to try it, right? And then at the end, when they're happy with their strategy in the playground, we would then take it out and test it on the real past data.
Fascinating.
This is a bit our strategy.
Yeah, it's a very innovative approach, and it's involving data and human experience and best practices, and keeping everything extremely unemotional, but also understandable for your clients. And how has it been performing? Have you been getting good results with this kind of hybrid approach?
So this approach with the GAN stuff and the synthetic data, this is really something we're trying out right now. So we didn't use it in a live product. It's been a few months that we were trying it out, and it's quite impressive how it's able to generate really, I would say, realistic time series for the type of data that we would give. An example is that we use the VIX, so the volatility index, and the S&P 500, and they work together kind of. So when there is a lot of volatility in the S&P 500, then the VIX will go up.
Right.
That's a bit. So they have some kind of
correlation.
I forgot the term, but correlation. Yeah. So we wanted to see if the model would be able to. If the GAN would be able to see those correlations, to understand how they work together, those two time series, and then to output realistic time series that would also, when the fake S&P 500 would be very volatile, then the fake VIX should also go up.
Right.
And this we have had really good results with that. So this shows that there is really potential on that.
Yeah, so it's a very promising approach. And is that what's coming next for Alquant? Are you going to turn this strategy into an investable solution for your clients?
In the following months, we will be launching a new product, a new fund actually, which we have worked on it for almost 2 years because we had a lot of regulation to pass. But now it will be launched with around 30 million US dollars to start with, and the goal is not to include this the topic I spoke with you right before directly in it, but to implement it like maybe incrementally.
I see.
So like we will, in any case, we will paper trade with this strategy to see how it works for a few months, and then if it shows promising results, then we would integrate it gradually in our new strategies.
Yeah.
Typically the new fund that we created.
Like a traditional investor would dollar cost average into a position, and you're kind of dollar cost averaging into the strategy, so that you don't
Yeah,
You don't bet the farm on.
yeah, we don't want to go all at once.
Right. That's good. I'm sure that'll give folks confidence that not only they're getting like this cutting edge research in this tool, but there's some human judgment behind it to say let's test, let's be very confident, let's ease our way into the strategy. I really I love it. And so
Exactly.
your website is Alquant, stands for algorithmic quantitative, I learned today, but alquant.com. So if folks come to your website, can they learn more about these strategies and sign up?
So actually on our website, alquant.com, we have a button on the top right, which is written platform. And this is where we display our different strategies and update it daily. We have our indicators. So folks can come here, learn about what we do, follow our strategies every day. They can subscribe to our indicators packages if they want to, they don't want to invest in our product, but they want to still have access to indicators made by quants. They could do that. So yeah, you can go, it's a platform.alquant.com or just alquant.com and on the top right.
Awesome. So you're not only creating investable strategies and funds and going through the regulations to set those up with all the scrutiny that you face, but you're also providing these strategies as data points that other investment in platforms or firms could use in their own investment strategy.
Yeah, so we have this indicators part, which is really here to, actually, the story is that when we started, we couldn't really open a product because we had no track record. Sorry. So we needed a way to show potential investors that our strategies were good and our indicators made sense. So we built our indicators and said, listen, we have a platform now. We can follow our indicators. Don't invest in it, in us yet, but just follow this, and you will see in a few months that we will beat what we said we would beat. And this is what happened, and this is how we got our first customers and first investors. And now this is we also distribute those indicators to other asset managers that are less quantitative, that don't have the bandwidth to actually, or the skills maybe to build those kind of indicators, but you can still use them to include them in their own strategies.
Nice.
That's great.
All right. Well, I love it. The website is alquant.com. And Valentin, thanks so much for taking the time to talk to me. I really enjoyed it. Thank you for joining me on this season of Fintech. What the heck? We appreciate everyone who listened to the show and hope you learned something new. This is a wrap on season 1, but we'll be back in a few months for more of What's New in Fintech. I'll see you then.